well. We have the ord-oracle.com every Tuesday and Thursday. Tim Ord of the Ord Oracle comes on the Tom O'Brien Show. We enjoy his analysis. Of course, I really recommend checking out his website. You can get his newsletter there, a book. Of course, he shows you past results as well. Additionally, you can go over to TFNN.com. You can go to the services tab, and we have 2 fantastic webinars from Tim Ord. Of course, we need that to load. It is the secret science of market tops and the 6 secret ratios every trader should know. Tim, how are you doing? The SPY, huh? Not a lot of move today. Of course, you get a gap up yesterday. Didn't have a lot of volume until right at the end of the day where it really picked up. And today it seems like we have some lighter volume as well, kind of trying to figure out where it wants to go right now.
Yeah, actually, kind of changed my mind what may happen over here in the next couple of weeks. But anyhow, let's go back to look at the bigger picture. Showed this chart on Tuesday. I updated today's trading. This is the main focus on the bigger trend. Anyhow, the bottom window is the 21-day average of the trend. Next window up is the 63-day average of the trend. So the 21 days is basically a month average, or a month worth of data to come up with that reading, and the 63 days is actually 3 months of data. But anyhow, both of them are right at, or actually the 63 days actually in bearish territory. Anything below 1 on a 63-day average, I got it in pink across the chart there. The chart goes back to mid-2017, and a lot of times it comes at tops. So on the bigger time frames, there can be bounces in a downtrend, right. And I think we're probably are going to start a bounce. I'll talk about that a little bit later. But the bigger trend right now is basically bearish. I think this year is probably going to at best be sideways, and probably could be down. But anyhow, so I'm kind of I don't know, being careful here. I'm not letting long trades ride for now because of this chart. So let's flip to chart 2.
Sure.
That's the bigger trend. Chart 2 is actually a smaller trend. The bottom one is the 3-day average of the trend. The next window up is the 5-day average. The next window up is the 10-day average. And they're starting to improve from Tuesday. If you look at 3 days, preferably you like to see all 3 of those moving average of the trend in 1.2 or higher.
Okay.
A lot of times those are bullish. That's pretty much leaves bullish markets, and all the pink areas times when all 3 of those moving average were in bullish territory. And we haven't been in bullish territory since September. But in December, we had 2 of those moving averages get in bullish territory, but never the 10-day average. But over the last couple of days here, these moving averages, the 3 and the 5, and eventually the 10 are going to start moving up here. So I'm thinking the market is going to go into a trading range. I don't think the current rally is going to last. I think it's probably going to find a peak here pretty quick.
Sure.
But what I'm starting to see is panic entering into the market, not to a degree where you should be long here, but I think that setup's going to come. Mm-hmm. So let's flip to chart 3.
Sure.
Here's my analysis. We did trade once in January here, and I did get kind of we were talking on Tuesday, I thought, yeah, we're probably at support, but I don't have a strong enough signal to really get long here. Okay. The market did bounce, but I didn't take the signal. But I think it may get back up to the gap up around that 600 area, mm-hmm. Which is that tan area, which is right above us. I think it may push there. I'm not for sure. I'm not too worried about if it doesn't or not. But I bet we fall back down to the big gap we had yesterday. The market gapped up yesterday, left a big gap. And that's gaps right inside of a bigger trading range. It kind of marks the midpoint of that big trade range. At some point, that gap's going to get filled. And I think we may push up a little bit higher first, possibly. This is expiration week, which normally leans bullish. Mm-hmm. I think we may push to the 600, then fall back down to around where that gap, where the bigger gap is, well, yesterday's gap is, which is around 583.
I see.
And I noticed the trend starting to go up here. If you notice today, even the market's kind of unchanged.
Yes.
The trend was higher. We're around 1.1 right now. And I think it's probably a little wave 4. If you do Elliott wave, this could be a wave 4, then wave 5 finishes off tomorrow or something. I'm not sure that's going to happen. I'm not going to bet on it. But what I probably am going to bet on is a pullback into that 583 area. And if it does, I think the trend, since previous times, that trend into that region did get it around 1.2 or higher in that vicinity. If you notice, I labeled in blue, actually in blue lettering, the trend closes, and I marked in a blue box there where all those trend closes were. So if we get back in that trend area again, which is noted with that blue area, previous times it's got panic in that area, chances are it'll do it again. So I think we'll fall back, and the trend's going to get into the at least 1.2, if not higher, and probably push the 3, the 5, and the 10-day trend up into bullish territory. I bet somewhere around that 583 area. And if we do, then I think we'll actually go back up and at least test the highs, if not break the new highs. Now we think, well, that's a contradiction of the 63-day trend being bearish territory. Not really. This is just a short-term trend. I don't think it's going to last. But it could be a decent trade to the upside, because if we get to if I get a signal around 583 and we break the new highs, which I think we will, it could be a 4 or 5% trade to the upside, and that's worth taking. So I'm thinking if that's going to materialize, not sure it will, but I'm thinking it will, and I think we'll probably see some sort of a high in February, because I think this trade will take another week to gel up. Sure. I don't think it has enough power now to keep going, other than maybe hit 600. So from there, I bet we fall back down.
Right.
And I bet the trend starts getting back up to that on the fall back down part. The trend will start getting back to 1.2 or higher, and that will trigger the next buy signal. So I hear the music.
Yeah,
so.
Tim, please stay right there, folks. We'll be right back with Tim Ord right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. Again, strongly recommend checking out his website at ord-oracle.com. Before we went to the break, we're taking a look at the SPY chart. Obviously, not a lot of movement going on today, but Tim, you were basically saying that the trend was climbing a little bit today as well.
It's not topping here, I'll put it that way. Right. I think we're making some sort of a base, and in the like of this chart number 3, I got those trend readings, which is I put it in a blue box here in that vicinity. So once you trend readings start to develop in an area, that area becomes support. And so what we just need, though, we need ideally the 10-day trend to get up around 1.2, and that's probably what we're going to eventually get here over the next week or so. I think we're going to try to rally, and it's going to fall back one more time, and that next time is probably going to be the trade that's going to be worthwhile, and we're going to try to break out to the upside. So on a short-term basis, I don't think this is an intermediate-term rally to the upside. I think the market still, the whole thing's topping here, but 583 on the SPY, I think it's in that vicinity is going to be the trade setup. So that could develop late next week. I don't think they'll do it next Tuesday, but we'll see. We'll trade as we go forward here. But right now, if I had that trade on that we talked about Tuesday, I was kind of leaning that way.
Yes.
I would probably, take that trade and run with it, or not run with it. I think it's close enough. Made 2%, I'd sell out, because I think we're going to come back down, fill that gap we did have on yesterday. So anyhow, we'll see how that develops. Next week I'll have more information if my theory, which is that blue arrows I got on this chart, if that works out or not. So, but if it doesn't, some other scenario may develop, and I'll present that. But the scenario, what I got right now is I think we may push a little bit higher and fall back down into a low sometime next week. Then that's the trade that's going to be a worthwhile trade to the upside. So anyhow, I'm staying neutral for right now, though, not chasing the market. So let's go to chart 3, 4.
Absolutely. I'm pulling up 4 right now. Got the GDX rocking. Okay, good.
Yeah, anyhow, it's top window's GDX, and actually I want to make a note that I thought that was Head and Shoulders bottom, and I thought the support comes in around the neckline, which is 34, and if you look at where the market bottom over the last couple of weeks here was actually 34, so that neckline did find support. Bigger trends up. This is a monthly chart of the up-down volume, which is the bottom window. That's a cumulative up-down volume. Next window higher is a cumulative advanced decline. Gave a buy signal back in, I think it was May, and still on a buy signal. To get a buy signal, you need a jump above the mid-Bollinger Band, and so I think this is just a pullback in an uptrend. And we pulled back to the neckline, found support, and the monthly chart remained on a buy signal. Chart number 5, I presented this on Monday, or Tuesday rather. This chart gave a buy signal when the RSI falls below. Actually, I can tell you what the chart is. The second window down from the bottom is the bullish percent index for the gold miners index / GDX. So it's another ratio, and I use an RSI on that ratio, which is the top window. And when it gets below 25, it's in a buy area, and this chart goes back to 2006. And the blue lines show all the successful buy signals. Well, there's one failure back in 2013. All the rest were decent buy signals. So anyhow, we got an RSI below 25. Currently, we're at 2291. Even though the market's pulled up a little bit, the bullish percent index / GDX hasn't started rallying yet, but it will. So we're probably at another start of an impulse wave to the upside.
Okay.
My view. How long? I'm sorry, go ahead.
No, I was just affirmation right there. So.
Oh, okay. All right. So anyhow, it looks good. Nothing, can the market mill around for a little bit? Yeah, but in general, this market's going to work higher. Chart 6, which is this kind of looks at the real big trend. This chart goes back to 2009, and the bottom window is the GDX GLD ratio, and this ratio has been hovering around 0.145. We're at 0.148 right now, but the 0.145 seem to be an important area because previous intermediate term, if not longer term lows, is formed when that was hit. And we hit that here basically in late December, early January. It has since turned up a little bit. But all those were impulse waves to the upside. So the GDX ratio kind of is a relationship between gold stocks and gold. So the cheaper that ratio is, the more cheaper gold stocks is compared to gold.
Right.
And so this is kind of a value situation. So gold stocks compared to gold are relatively cheap here. So that's another kind of value. Can this thing start screaming to the upside at some point? Well, so far it hasn't, and maybe it won't, but it should at least get back to the previous highs, which is up around 0.2, somewhere in that vicinity at a minimum. So don't know when that'll happen, but it probably eventually will happen. And maybe we'll get a rally back into the 2010 high of 0.4. Don't know. But anyhow, we're at the cheap area of the gold stocks right now. So let's look at the very short term. Showed this chart on Tuesday, and it's just a short-term momentum chart. It's designed to kind of catch the trend. It doesn't try to catch the wiggle. It does try to catch the big wiggles to the downside, but not the small wiggles, because it won't do much. Well, anyhow, the blue areas are times when both indicators, which the bottom indicator is the 18-day average of the up-down volume, and next window higher is the 18-day average of advanced decline. When both those indicators are above -10, the market's in an uptrend. When it's below -10, the market's considered in a downtrend. And over the since March, it's basically the market's pretty much been in an uptrend, except for November and part of late December, early January. But now, since it's back up above -10, suggesting an impulse wave begins here. And this market, these two type of indicators are usually not real they don't flip above -10, below -10 a lot. It can get a little whippy, but most of the time it stays in one direction. Either stays below -10 for a while or it stays above -10 for a while. And so I'm thinking this is going to stay above -10 for a while. And we did expand from last Tuesday. I think they were around +3. Now we're around +12 here or better. So this is starting to trend. It's not designed to catch the bottom, but it does help to confirm the buy signals I got over the last couple of weeks. For now, we're starting to trend to the upside. So gold market for the gold stocks are now bullish.
Fantastic. Tim, thank you so much for joining us. We'll see you Tuesday, all right?
All right, see you then. Thank you.
Folks, stay right there. We'll be right back.